then silver is very close to its nominal all-time high, $50 an ounce. So, it's really getting up there. And so a lot of people are asking, okay, is this the end of this bull market?
The Financial Survival Network. Now more than ever. The Financial Survival Network.
Welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. John Rubino is back with us. John, hey, first go to John's Substack. It's rubino.substack.com. John was really ahead of the curve here getting onto Substack. I recently made the transition. I don't think about my website anymore. I don't think about sponsors for it. I don't think about when it breaks. What do I do to make it go back up? I don't care about any of that stuff. So highly recommend it. And John, you told me something pre-call that shocked me, that in Vietnam, they're selling metal on every street corner and none of the booths have silver.
Hey, Kerry. Let's take a step back and look at the precious metals market in general, because that's why the Vietnam thing matters. Because gold just touched its all-time inflation adjusted high. So it's never been higher, no matter how you measure it. So this is a rockin' bull market. And then silver is very close to its nominal all-time high, $50 an ounce. So it's really getting up there. And so a lot of people are asking, okay, is this the end of this bull market? Are we going to bounce back off the resistance there and go into a big correction? And are we going to get round tripped on our stacks and stuff? And I think the answer in this case is no. The longer term trend is in place because those previous precious metals bull markets were kind of about the business cycle of the time. What was going on in the 1970s and how high would inflation go and stuff like that. And inflation was transitory back then. And so gold and silver went back down. This time around, gold and silver are rising because the fiat currency experiment is ending, which is a much bigger deal. That is secular. That's epically secular. That is a whole new world being born right now in finance. And we're nowhere near the peak of that process because, the fiat currencies of the world are still out there functioning, but they're starting to deteriorate in an unstable kind of hard to predict way now, where it's not smooth, and that's what's spooking everybody. The dollar is losing its value. It's down by like 10% in terms of real things that you have to buy with gold. And that's just 1 year's deterioration, and it's continuing now. What that means is that we probably have further to go in the bull market for precious metals right now. The long-term trend is massively up, but even the short-term trend is looking pretty interesting. And one of the ways you know that is, like you said, Vietnam. They're a society that owns a lot of gold, and the government makes it easy by allowing stores just to sell precious metals with minimal regulation. And so any store you go into on the street in Vietnam might be selling you gold and silver coins or bars. And right now they're out of silver. They've sold so much silver that the supply can't keep up with demand. And so a lot of these places are just out of stock on the most popular silver coins and bars. And that's the kind of thing that usually presages a kind of parabolic spike driven by panic buying. Because if you want silver, you got to pay way up for it now to get it, right? If you can't just walk into a store and buy it. And so that's the kind of sign that we're in the intermediate stages of the bull market, and we haven't really had our parabolic spike yet. So I think if you're stacking, continue to stack. Don't go crazy out there, but continue to add to your pile of gold and silver and dollar cost average or whatever it is you do. Just keep on doing it, because the wind is still at your back. And we've got a ways to go before the resistance starts pointing towards, a big correction or anything. I don't see anything like that right this minute.
I couldn't agree with you more. Look, it was just a month ago, 2 months ago, I was buying silver at under spot. Uh, nobody likes these Kennedy 40% half dollars. But in the meantime, I bought a bag of them, $1,000 face value bag, way back in, was it like 2010 or 9, after silver had crashed, uh, when we had the great financial collapse. Uh, but we don't know from great financial collapses in this world.
Mhm.
But now, like people, I bought it for under spot, under melt value. A 50-cent piece that's 40% silver, and now those things are worth like 6 times what I paid for them, even though they're maybe going for a little under spot, under melt, or at melt, whereas 90% might be going for a few percent above. But my feeling is that when silver really gets tight, people aren't going to care if the coin is 40% or 90%. They're just going to want it. And I think Vietnam could very well be the precursor to that, John.
Yeah, yeah. When the supply of something dries up, but its price is still rising, so people fear missing out on it. You get the potential for some really wild moves, and I think silver is such a first of all, it's a small market relative to a lot of other financial assets. So there just isn't that much silver out there. It's kind of thinly traded because a lot of people, especially stackers these days, we don't trade or we just buy it and put it away. So it's taken off the market. And it's in deficit right now as far as industrial demand goes. In other words, the world's silver mines aren't producing enough silver to satisfy the demand from solar panel makers and EV makers and the military industrial complex around the world making missiles that have silver in them, and that is vaporized when the missiles blow up. So
Mm-hmm.
we're not producing enough new silver to satisfy the demand, and the existing stockpiles of silver out there are being depleted rapidly. So, one way this plays out, or one way this is revealed, might be a default on a metals exchange like COMEX, where you've got a futures contract that allows you to demand delivery of X amount of silver. You take it in and say, okay, I'll take my silver. And they'll say, sorry, we're going to have to give you cash. And that's so you still get paid back,
Yeah,
but it's a default because they admitted they don't have enough silver to cover the contracts. And that'll cause people just to panic if that happens. God, that will be amazing. Because
that's
the industrial guys who need silver to produce the expensive stuff they produce, they don't really have an option of just sitting back and thinking, all right, I'll wait till it goes down $20 an ounce because maybe then they can't make their cars or whatever, or
yeah.
Raytheon will be able to supply the missiles to defense that they promised. Yeah. So you can't let that happen. So you got to buy the silver at any price. And the the situation is such that we could see something like that sometime in the balance of this year or next year.
I think it's a definite. That's what Keith Neumeyer has been talking about, commercial signal fail. That's basically what we're talking about, where the paper market kind of just disappears. It vaporizes before your very eyes, and then you're just left with the physical market, right?
Yeah, I mean, if the paper guys cannot produce physical, then what are they? They're just a bunch of financial doofuses
Yeah,
playing games with computer code. It's just signals going back and forth. There's no physical reality to any of it, and
it's been
people
that way
abandon
for a
it.
while.
Well, I mean, they've been able to manage to give metal to people who ask for it. There hasn't been a physical default yet, but when that happens, that completely changes the nature of an exchange like COMEX, right? I mean, if they don't have to come up with much metal, that's one thing, but if they can't come up with any, that's a whole different thing. And it's totally possible that something like that happens in the not too distant future, and it'll look kind of like the stores in Vietnam, where all of a sudden everything's out of stock, and if you want it, you got to pay way up because you can't go through normal channels.
Yeah, like We've been waiting for this for like years here, and
20
here we
years.
are.
Yeah.
It's finally upon us, and so many of you out there don't even believe it because we thought we'd never see the day. Because look, they've been controlling the price of silver for 60 plus years. Arguably, you could go back to the late 1800s and the demonetization and William Jennings Bryant and all that. But let's just say from 1965, when they demonetized silver from the coinage, it's been manipulated from that point forward. That's not a stretch. And now all of a sudden, the game is up, John.
Yeah. Yeah. We're close to that. We're close to the point where the old systems don't work anymore. And see, you ideally would like to be fully invested by then. But
Yes.
if you're not, you still don't want to jump in with both feet because precious metals, like a lot of markets these days, are very volatile and you can get burned. So,
Uh,
the time to have finished our buying would have been like 2023. But still,
well,
whatever you've got, you should hold.
I was just buying it for fun on eBay just to show people you could buy for less than spot because I'd wait till a Friday where silver went up $1 and then most of the sellers on there were not adjusting their prices. So I would get it at the they'd be up there for 3 or 4 days. Silver went up $2, $3 an ounce, and they didn't adjust their prices just to prove that it could be done. And
That might
sure
be
enough,
a career, actually. Just going on eBay and exploiting the people
arbitrage,
who aren't paying attention. Yeah.
totally arbitraging it,
Yeah.
and it was simple, like you just knew, like you looked on, you could pretty much figure out the melt value per dollar of of silver, and 90% was like at 26, and 40% was like at 12, say. I don't remember the exact numbers, but it was crazy, and like it just totally worked. Now it could have easily not worked as well. I'm not perfect at this game, and the cycles, they can really whipsaw you, and you can really wind up getting burned. But I felt like at this point, John, I wasn't betting the ranch on it. It was more just like a fun activity, and it worked. So you can't beat that, right?
You know what else I noticed was a couple of years ago, a lot of friends wanted to sell their silver
Yeah.
and they were willing to sell it at spot. I bought a monster box off of a friend of Silver Eagles at spot, which is pretty hard to do in a normal market. And three or four other people sold me some silver then too. So I think there was exhaustion. At the same time this thing was just getting started, there was exhaustion out there on the part of people who had bought silver
Mhm.
in 2002 or something like that, and had just been holding it all this time, and it went up for a while and then it went back down, and it's so boring. I need to get my cash out, and that's kind of a
That
sign of
was
a
the
market
sign.
bottom when people are just willing to go, all right, just take it away. I thought it was going to be better than this, and it wasn't. So and yeah, so that was that was kind of a lucky break
Yeah.
that to be around people like that. But it was also a sign that something like today was going to happen. Where you get this long upswing that then everybody wants to join, and then it really takes off. So we're up big today in both gold and silver.
Yeah.
I don't
Well,
know where we are exactly, but
yeah, every raid they've tried to bring it, whether we're tinfoil conspiracy, but just assume that they do raids, and you'll see in the access market in the early hours, they slam it, which is thinly traded in Asia, and they slam it down $1, and then by the afternoon, it's erased all its losses and is up, or is only down like 5 or 10 cents, and then they'll time that hitting the silver stocks. Um, they'll hit the SIL, the ETFs, and the SILJ, and but it has no lasting effect. So that's pretty indicative, I think, of what's really going on here. And
Yeah, this is completely different trading patterns than it used to be, because it used to be that at like 4 o'clock in the morning, somebody would just smash gold or silver in the futures markets, but then they would stay down for most of the day. That smash would have spooked people, and they didn't jump right back in. But now you see the smash, and then you see a gradual increase in the price from there, and it goes up and it goes up, and it ends the day up, even though somebody came in with a lot of money in the futures market trying to knock gold and silver down. So yeah, that's a bull market behavior.
Who would do such a thing? Selling losses, making losing trades by design. Why would
Speaking
anyone
of
do
JP
that?
Morgan Chase, yeah. Maybe JP Morgan is just finally loaded up on enough silver that they're ready to let it rip. So that could be.
What about the reports that gold is pouring into the United States from Europe? I don't know if you heard that. We hadn't talked in a while, but supposedly vast amounts of bars are coming here, like tons and tons.
Well, a lot of that stuff is tariff related. They just don't know, how it's going to be to move metal around, and they want to get ahead of it because maybe Trump's going to slap a 50% tariff on it from, starting next month or something like that. And so that's part of it. The other part of it is that Europe is a mess. Europe is almost over as the continent that we once knew, And if you look at France, that was on our list of things to talk about. So now we could segue over there, because here's France's story. They, were a fairly rich country by basically any measure 20 years ago or so, and they set themselves up with really generous a social safety net and retirement plans and things like that, where you retire at a young age and you make basically a nice living off of the government. And the lines just crossed. It used to be that the average person would make more during their working lifetime than when in retirement. But the line just crossed, where the average retiree now is set up to make more during his 30 years of retirement than the average person makes during their working lifetime.
That's
so
crazy.
they basically set up a completely unsustainable welfare system. So they did that. And that requires massive increases in government spending. So they let their deficits go up way beyond the rules in the Maastricht Treaty that defined the European Union, and the euro. It was supposed to be that you were limited to a 3% of GDP deficit. Well, France just blew through that. So they're racking up massive debts, and their interest rates are going up because the bond market doesn't trust them anymore. So the cost of the debt is going up basically twice, because the amount of debt is going up and the interest on that debt is going up. And France is basically going broke. And so they can't keep a government in place, because the only thing a government can do now, if it's rational, is try to scale back spending to prevent the fiscal and monetary train from going off a cliff. And as soon as they do that, all the French people hit the streets. They get the government thrown out of office. And that just happened, where the most recent prime minister was in power for like 16 days, and then he had to quit. So France cannot fix its problems. It's going broke at an accelerating rate. And it's one of the so-called success stories in the Eurozone.
Yeah.
Because Germany is a catastrophe for other reasons. They just destroyed their energy economy, and that deindustrialized them. And now, while that's happening, while these countries are engineering financial crises, their open borders are letting so many people from so many other cultures in that a lot of different parts of Europe are becoming caliphates almost, that are ruled under
crazy.
very different rules than used to prevail in a liberal democratic quasi-capitalist society, which is what we used to think of as Europe. So they've got a civil war on one hand, or maybe two different civil wars. One, the different cultures fighting each other. The other, the government fighting people who are demanding ever increasing amounts of social spending. And, there's no way the euro
Yeah,
as a coherent reserve currency survives something like that. So that's the next decade for Europe. They are a catastrophe waiting to happen. And it could be that a lot of Europeans are shipping their gold to the US because of that. They're looking for a safe haven for storage of wealth. And they're
right.
choosing the US, although we're not exactly the most stable system that you're ever going to see
You.
either. So, but I guess relative to Europe, we're okay. But, I don't know where you hide, really. If you're extremely rich and you're trying to protect $500 million worth of gold, I wouldn't know where to tell you to put it right now.
I guess it comes to the U.S. just like it did before World War II, right?
Well, yeah. And that was a time when the U.S. was in relatively good shape and the rest of the world was a mess. So that's kind of an analog, but the U.S. is a mess too. I mean, we've got
Yes.
we've got the kind of French problem going where we're borrowing insane amounts of money and the interest on that debt is going through the roof, and there's nothing we can do to stop it because if we try to cut spending, then whoever does that gets kicked out of office almost instantly. And the military budget is $1 trillion a year. So we have problems that are similar to France's. Their big problem is the social spending. Our big problem is the combination of the military industrial complex and social spending. But either way, the currencies of countries like that can't survive for long because the value of the currency starts to fall, and then you have a choice of, do you raise interest rates to protect the currency, which blows up your financial system, or do you just let it fall, which blows up your financial system? And multiple countries in the world are there right now. They are at that decision point, and the U.S. is not far behind. So that's when I
Wow.
say the fiat currency experiment is ending. That's basically what I mean. It's that this idea that everybody has an unlimited printing press and they
Yeah.
manage their economies via creation of money out of thin air. That whole thing is ending. And it's a phenomenally good thing for gold and silver to take us back to where we started. In that kind of an
Yeah.
environment, everybody wants real money. And they will throw unlimited amounts of fake money, that is fiat currencies, at the real money to get as much as they think they need. And those are the things that are coming right now.
The Minsky moment is here. So,
Yes.
hey, so what about the government shutdown? Like nobody's even noticing it, right? You noticed it was shut down?
Um, well, government shuts down all the time in the U.S. We have that the debt limit law,
Hmm.
and that's always the lever that they use when they're negotiating. We're going to shut down the government unless you give us whatever we want. And so the government shuts down for a little while, and then there's outrage, and then they cut the deal, and the government goes back online. What might be different about it this time, though, is that a lot of people around Trump love the idea of a government shutdown because that lets them fire government workers with impunity.
Correct.
You can't take them to court when they're laying off workers during a shutdown, but because you can legitimately say, hey, well, I don't have the money to pay these guys. What am I supposed to do? And so these guys get to go in and clean house in a bunch of government agencies now, and they actually are kind of enjoying that. So it could be that there isn't the urgency to cut a deal this time around that there once was. We could end up with the Democrats begging Trump to reopen the government by accepting their latest proposal of surrender. Because they
Yeah.
don't want 1 million government employees to be laid off. That's a horrifying idea for the
Oh, it's a
Democrats because
start.
that's their voter base. Yeah. But for the Republicans, it's like, well, so what? They aren't going to vote for us anyhow. So who cares whether they can feed their children or not? So we'll see.
Yeah, well, the whole government work as a form of welfare is kind of coming to an end now. I think that's what we're seeing. And they're willing to let it happen. And, the government union lobby is not what it used to be. I think they've laid off 300,000 fired 300,000 government employees so far, federal government, and another 100,000 are putting in their retirement papers now as we speak. So we got all these buildings in downtown Washington, D.C. Maybe they can turn them into deportation centers or something.
Well, see, this is the landscape of a currency reset. When the fiat currency system ends, and we go to something new, like a gold standard or something else, some kind of sound money where the government doesn't have the ability to borrow unlimited amounts and just print the difference, then we have to live within our means, which means government spending has to be cut by a third to a half in most of these big countries, which means we can't have all those government employees. So they're going to get fired regardless, even if the government starts back up tomorrow and everybody's rehired and everything. We still have the currency reset, which is going to involve a massive decrease in government spending and employment. So this is coming regardless, and we don't know what the form will take. But it could be a government shutdown over the budget, or it could be a currency reset. Either way, 1/3 of federal government employees are looking for private sector work within the next few years.
That's virtually baked in the cake, has to be. So what about AI here? Like AI, the big savior, you see bumps in the road for it, huh?
Well, I wouldn't presume to have any idea what AI is going to do in the next 5 years, because it's doing amazing stuff right now. But you also have people talking about the limitations of it, and that you literally can't make it much smarter than it is right now, because you hit kind of an event horizon where to make it anything like mistake-free, it takes more money than there is on Earth right now. You can't get it beyond a certain point. But the point it's at right now is pretty astounding. It's doing a lot. It's taking a lot of college or computer programming jobs. So that avenue to job security isn't there anymore. You can't just go learn to code and then know you're going to work forever. And it's doing a lot of other stuff, very interesting stuff. But there's a business practice out there that is really scary in the short run. And that is kind of vendor financing right now, where, say, NVIDIA, which is the big chip maker in AI, invests a bunch of money in OpenAI, which is building a lot of AI server farms, data centers. And so then, in order to build more data centers, then OpenAI comes around and buys computer chips off of NVIDIA. So NVIDIA is in effect financing it's buying its own products, right? And businesses do that every once in a while. That's kind of a common thing. You give a loan to your customer so they can buy your stuff. You then record that as sales and profits. And the debt gets shuffled over to the balance sheet where nobody's looking. And that works as long as your customer can pay back the money that you've lent them. And where you get into trouble is where the customer goes bankrupt. And then all this debt that you thought was going to be just paid back via profits and cash flow has to be paid back some other way. And so you risk going bankrupt too. So that's happening now in AI. And, they've got so much money coming in from outside, it seems reasonable. If your equity market cap is $4.5 trillion, you can throw $100 billion at vendor financing, and it's a drop in the bucket. But that's what it's like in really good times. But as soon as times get hard, those loans become really onerous liabilities of the lender. And so we'll see. It's a dangerous thing that's happening. And equities, especially tech stocks, are as richly valued as they've ever been in human history. So based on historical measures of valuation, we're due for at least a correction and probably a really nasty bear market. And if we do get an equities downturn, then all this vendor financing is going to become front page news. People are going to be wondering how that was allowed to happen. And that won't be good for stock prices when it happens.
Yeah, that's for sure. You know, the one thing about the AI is like the big companies using it, like forget OpenAI, which is strictly just an AI company, but obviously X, which is using it, Grok. And then you have Google with Gemini, Microsoft with Copilot, and Meta with, Facebook, whatever the heck they call theirs. And even Amazon is getting into the act. For them, they're not AI first companies. So they're probably sustainable. But for companies that are just like Claude, there's a zillion just pure AI companies. How did they survive? Why is theirs any better than ChatGPT? Well, interesting times ahead. I guess we will get together again shortly, and probably I expect the next time we talk, John, that there will be either a massive fight to keep silver under $50, uh, because that is the line in the sand. And maybe gold will be over 4,000. That I think is a layup. But at some point, we didn't talk about it. The gold to silver ratio's got to compress, especially if gold is, you can buy all the gold you want as long as you're willing to pay for it. But you can't buy silver because it's just not there, regardless how much you're willing to buy. Anyways, make sure you go over to John's site, rubino.substack.com, and our site, which just go to financialsurvivalnetwork.com. It'll take you to our Substack. John, we will talk to you again soon. Be well.
Thanks, Kerry. You too. Talk to you soon.